Jamie and Steve. What's going on, guys?
Well, hello there, Scott. Steve, hello to you as well.
Hello.
And hello to everybody else out there. It feels like it's been 1 billion years since we had an office hours webinar. I think it's been well over a month. But here we are again, September 12th. Welcome, everybody. And before we get rolling here, just want to get through. All right, I just heard the attendant tell me I was muted. I don't know why that happened, but hopefully I'm not muted anymore.
Good now.
Okay, perfect. So just want to let everybody know out there that all the information that we share with you guys in these webinars is for educational purposes only, simply meaning we will never advocate buying or selling of anything, especially stocks and options and all that good stuff. If you do need that type of advice, please do yourself a favor, seek out a registered person that's legally allowed to do that for you, whether it be a registered investment advisor or a Series 7 licensed stockbroker. They can facilitate that type of stuff for you, but everything that we share with you guys is for educational purposes only. And before we get rolling here, just always like to take a little time at the top of the hour, let everybody know about the community that we've fostered around the tech that is Trade Ideas. Of course, we have the trading room over here. Probably most of you are already familiar with Barry in the trading room, but if you're not, you're probably doing yourself a bit of a disservice because the trading room is free of charge, and Barry is a super fantastic trader and moderator. He doesn't mind answering questions about the software and trading in general. Once the busy time has passed, the first hour or so. So if you have not been using or taking advantage of the trading room, by all means, get in there and do so. Of course, on Mondays, or every other Monday, I should say, you get myself and Steve for office hours. Every other Tuesday, Steve's going to take the steering wheel, and it's going to be Andy Linloff riding shotgun with him for the Trade of the Week webinar. Wednesday rolls around, we got our CEO and founder, Dan Merkin, and Brad Williams, typically giving you a peek at new functionality that might be coming down the pipeline. Recent example would be the races, and we're going to talk about those as well again today. Thursday shows up and we get Andy with the trading studio, and I ride shotgun with him. That rounds out the 5 p.m. Eastern Monday through Thursday webinars, but we do have every Monday through Friday our daily support session from 12 p.m. to 1 p.m. Eastern. Great place to go, get your questions answered live, where you can see a live version of the trader/trainer person that's hosting the webinar that day. So anything TI related is fair game for the daily support session. Of course, on the next slide here, it'll show you how to get there. This is a static address, trade-ideas.com/live. It'll get you to our YouTube channel, and then all you have to do is watch and participate. So you can easily bookmark this for easy peasy access. Yeah, I almost forgot about these guys. The TI University, a great 4-part series covering everything from the basics all the way to advanced things like back testing and all that good stuff. But if you are brand new, do yourself a favor, at least watch these first 2. Goes over a lot of the basic functionality and will certainly help you get over that learning curve quicker than it would not watching these videos. And once again, these are all on our YouTube channel. So just make your way to YouTube, find the Trade Ideas channel, do a little search, and you should be able to pull these up no problem. And the cool part is you can stop them and start them at your convenience. And here we are at today's agenda. Got some really cool stuff on here for you guys today, pretty much all focusing around the races and how I've been refining the way that I use them. So we'll get into that here in a little bit, but another gap up day. Market might be getting a little tired, Steve, so if you'd like to take it and talk about that overall market action, I guess now would be a good time.
Yes, sir.
Or I can kick it over to you here. Let's see.
I'm sorry, clearing my throat there.
Yep.
All right, definitely a lot to talk about.
Okay, I think we've got your other screen up, Steve.
Uh-oh. Okay, hang on a second. Let's see here. Sharing screen. You are correct. Thank you. No, that's not the one we want either. Just want to make sure there we go.
Just get the unicorns off first.
Here's a method to my tabs and madness and two-screen real estate management. So yeah, anyway, there's a lot to talk about. Spiders, S&P 500. I mean, let's just start there. Obviously back here, the 200-day moving average, this was the big rejection. This is when the market lost its 50-day. This Qs are even more defined there. But that rejection was huge. The reason it was huge is because in hindsight, we look back and that rejection was just spot on once again. So I mean, it's pretty much a historical pattern developing that every time the price gets up to the 200-day moving average, it gets hit over the head with a frying pan. The only question is this time, is it going to get back? So I'd say it's got a fairly good shot. You know, we had some real negative sentiment down here. The market really had nowhere else to go but back up. Sometimes, you know, you just have to take the sawtooth patterns as they come. The sentiment was extremely bearish, and so the market ran up into the 50-day, and then I believe it broke through the 50 and started to really spook the short sellers, and so we've gotten a bit of a short squeeze, I think, into the 20. Now the SPYs look the best. The 20 is this red SMA I'm talking about, and they look the best compared to the next two that we'll look at. So I think it's all going to come down to, are these indexes going to get out of the tangled web of the declining 20-day simple moving average? Now we do have, I believe, Wednesday CPI numbers pre-market. Somebody can correct me if I'm wrong, Dave or David. So that means we've got tomorrow's trading to maybe circle around a little bit and see what the next catalyst is, looking at CPI numbers, which of course is the chess game of what's the CPI going to mean when the Fed looks at those numbers, what's the Fed going to do, and the whole game starts over again. So let's look at the Qs. Again, the S&P has broken through and closed above, but not so much for the other ones. The Qs have tagged it today and pretty much held it. They are trading a little higher after hours. And then the IWM, which is the Russell 2000 small cap, same thing. Now, it's also trading higher after hours. Russell 2000 also got stymied by the 200-day there. So I think there's a pretty good chance that this little bounce we have could continue. It looks like the NASDAQ doesn't want to play any part of it. You know, when you look at it relatively speaking, the NASDAQ could not get back to its relative 200-day, just like the SPYs did, and the small caps did. They were able to come back, the SPY and the IWM, come back and test that 200-day. Now, I did something today that actually Andy and I do a lot. I've got a swing positions, about 6 or 7 swing positions right now, and I want to try and let them work, but at the same time I also want to kind of protect myself in case I'm really wrong. So today I inverted the IWM along with Andy. Sometimes he nudges me and back and forth, and we kind of trade the same. Picked up some TZA here. This is the inverse of IWM, so it's lower after hours. I'll tell you, I'm not going to give it much. I'm not going to give it much at all. It was basically to hold on to this tight range here. If the IWM continues to bleed through the declining 20 there, meaning we start trading up in this zone tomorrow, I'm going to get out of that hedge quickly, and I'll just wait and see what happens again when we hit the 200. So that's probably going to happen. We'll see what happens tomorrow, but I'm not going to stick around in that short TZA for very long. It's just a hedge against some other good positions. I do want to highlight one thing that I think was very significant today in the bigger global picture, and that was what happened over the weekend overnight in silver. Now, you can look at the SLV ETF, but I'm going to just kind of throw some shade on this thing here. This thing is crap. It's garbage. I'm going to show you why. You know, here was the prior low and that, and now we've got a lower low in silver. This is a paper product. This is not backed by any gold, silver, or any audits or anything. It's paper. It's what these nefarious banks use to manipulate. You've heard of JP Morgan and Chase and Bank of America. They've all been fined and convicted of price manipulation in the silver's precious metal market desk. And they do so by creating synthetic shorts out of thin air. Sound familiar, like the GameStop and the AMCs? So this game is going to come to an end at some point. But, you know, let's look at what happened today. SLV, oh, it popped up almost 5%. Relative volume, interestingly enough, was only 1.8 times, so almost 2 times normal volume. So now let's look at the fund that I've actually used in my 401k, aside from buying physical silver. I think the day is coming where silver is going to catch up to gold. It's not so much a trade as it's more of a major position investment. So there's the lower low, there's the gap up. Let's look at Sprott Physical, PSLV. Now this one is an audited fund, a little different. Now, the technicals tell you the same thing. It tried to break that low down here, and I noticed it couldn't break that low, and I got in. My basis is like 620. I've been in and out of this thing a few times, but today something very weird happened. Almost 3.5 times normal volume. So people were rushing to the quality silver name of PSLV. So don't forget that name. Take a look at that giant volume bar. Pretty big gap up in a downtrend. This could be the beginning of something, you know. I've been waiting for silver to do something, but the price hasn't really confirmed the story back here. But all of a sudden, we have this giant gap up on big relative volume. And lastly, the dollar, really predicated on the dollar. We look at the UUP. This is a basket that I look at. The UUP just very well could dig in right here, and the dollar could move back higher, and everything I just mentioned about silver will not happen in gold. But if that UUP starts to bleed back down and the dollar weakens at all, what we saw today in PSLV and silver could have been really the beginning of something. If you want to trade it, don't use SLV. That's synthetic. PSLV is an actual audited fund that can back up every ounce that they claim they have. All right, Jamie, that's all I had pent up to talk about.
Very interesting, Steve. And yeah, I've been, you know, seems like we've been following the silver thing for at least a couple of years now.
Oh, so Tuesday is CPI? I'm sorry, Jamie.
Yeah, Dave was saying 8:30 in the morning.
Oh, okay. Well, that's interesting. I thought I had another day. That could get me out of that TZA really quick. We'll see what happens. All right. All right. Yeah.
All right. Let me grab the screen back here. But no, good stuff on the silver. Okay. Should have eyes back on my screen now.
Mm-hmm. Yep.
All right. Where'd my sheet go?
Brad actually asked me where to buy physical silver today. So
yeah, you know, it's there's lots of little mom and pop shops.
You have to pay many, many dollars over what the futures contract spot price is. They're running out of physical. Just do your research.
Yeah.
You can see the vaults are being drained of all the physical while this SLV continues to do what it does anyway.
Well, it's been a couple of years since I bought physical silver, but even back then it was, I want to say $2 to $3 above spot. You know, that's the spread. So
you're paying
pretty
more
hefty
now.
spreads in the physical world. Okay, well, we shall see, to be continued with the precious metals. Okay, so everybody can see my screen now. So Steve just went over the market recap there. Interestingly enough, the old compare count on the big cap names, anything over 4 billion on the market cap, we had a pretty bullish count this morning. 57, right kind of at the magic number. Which I kind of scratched my head and went, well, another consecutive up day, but you know, got to pay attention to what's going on here. Turned out to not be a huge move after, well, actually, first 15-minute candle right here, and then that's when we made the move. What did we close at there? 409.35 up to around 411.70. So another couple of points was in the SPY after that bullish compare count reading. But more importantly, told me, you know, hey, if you're going to be going long today, well, you might have a decent chance at getting some things that actually go up, not just in a 15, 30, 45-minute period, but you might actually have some sustained moves. And in the smaller cap race land, that's exactly what we had, and we'll get into that shortly. But decent compare count numbers this morning up the open. And before we get into the real juicy stuff with the race methodology that I've been working on, we still have to do the Holly recap here. So interestingly enough, the three things that we talk about when we're doing the Holly recap. And by the way, where did my AI panel run off to? There we go. Okay, so the three things that we typically focus on with the AI trades, conservative versus moderate spread, any trade arounds, and any add-ons. Well, once I pull the blotter over here, you'll see that when we're talking about, now, where'd my moderate column go? Got percentage, but I got no dollar value. 1 second here. Okay, there we go. Now we have moderate and conservative, and you can see there are no spreads, right? We're looking for a bigger number over here in moderate. Well, I take that back. This one changed since the last time I looked at it. So we got a little bit of spread here between conservative and moderate on Dash. Well, I tell you what, let's just go ahead and take a peek. All right, but you see where it was most of the day. We had the entry candle up here, 65.65. It was underwater for most of the day. Got back above water here at the close. So yes, if you would have stayed in according to the stop loss, because the stop loss technically never got triggered, you would have ended up making a little bit of money on a 100 share position. And that's what all these numbers are reflective of, 100 shares per position, as we can see right here. So instead of losing 40, you would have made 22. Nothing to write home about, but hey, a loser versus a winner, we'll always take that in the trading world. But you can see here from the rest of the moderate column, we don't have any larger numbers over here, okay? We got a bunch of red. So Holly didn't do too well today. In all risk modes, conservative down about 3.5 points, same for moderate. If you just threw caution to the wind and said, I hope things work out, you were down a little over a point, but that's not something that we recommend. Always have a game plan for your exit. However, there were some interesting trade arounds. And when we talk about trade arounds, we're talking about things that get stopped out, and then we see how those stocks react around the stop area. Sometimes they act as levels of support, and the stock hems and haws around them for a little bit and then takes a bounce higher. So even though Holly did not have a good day today, from what we see right here, let's take a look at these stop outs. So we had Guild stop hit. Pretty early on, this trade was generated here in the second 15-minute candle, about 21 minutes into the open, and was quickly stopped out. Let's see, Guild, where are you at? Yeah, sorry, about 21 minutes into the open, and the trade was only open for less than 2 minutes because the stop out came quick. So hopefully you guys can see the red line down here. Now, what did it do for about, let's see, once it got stopped out, 1, 2, 3, for about 45 more minutes, it wicked out at those stop areas. So theoretically, not a bad trade around. Sellers try to take it down. The wick is telling us that the sellers could not maintain control. And it took a little while, but it eventually popped back up and then moved higher. Looks like maxing out at about 68.80. So anywhere down here, almost a point in that trade around there on Guild. So a stop out nonetheless, but watching it pivot around the stop area could have presented a good trading opportunity to the tune of about a point on a $68 stock. Not a huge percentage value, but a move nonetheless. Let's see, VAL I think was another one that did pretty much the same thing. This trade coming about 45 minutes in and quickly being stopped out as well. I think she was in that one for, let's see, 9 o'clock on the entry, Central Standard Time, exit time of 9:13 before the stop occurred, and then a quick reclamation of this stop area here. And then it was off to the races. So the second mouse definitely got the cheese on this trade, either going back through the original entry or pivoting off the stop area there. So a decent trade around in the VAL today as well, and I believe Daku didn't really present any opportunity. Spent most of the time well underwater from that stop area. And coin wicking right off of the stop. Now this one took a little bit longer than the other two, than the Guild and the Vow. But eventually, once it did stop us out right here in this initial candle, 15-minute candle here, looking like it was going to hold, but throws one more elbow right here and the final wick down to 80.60, then reclaims it and has a nice run for about 1, 2, 3, about an hour time. Never gets quite back up to the original entry, but looking at this level here around 81.35 up to 83 and 56, you know, not a bad 2-point bounce off of this stop area. Once again, larger capped stock, Coinbase, but still a 2-point bounce off of that stop area nonetheless. So even though Holly looked pretty abysmal today on the overall P&L, some decent trade arounds in 3 of those stop outs. All right, Holly, we'll see you tomorrow. Try again. A little bit of water here before we cruise on to the next topic. Okay. Now, once again, it's been a while since we've last come together for office hours, and with the exception of last week, I was out pretty much all last week due to a family situation, but resumed what I had been doing the prior or the week before last. Today was a little foggy, a little crusty, but found my way back pretty quickly. Now, before we start talking about the stock races, those of you who attend this webinar on the regulars, you've heard me talk about opening range breaks just about every webinar, right? Opening range breaks, the pattern, the simplicity. That's pretty much it. Very powerful, very simple, especially if you find the ones with volume. But the problem has always been, how do you find them? Okay. And how do you narrow down the universe? Because we can't really create a scan that's going to find the perfect opening range breaks. So what I've been relegated to in the past is using new high, okay? A daily new high. Now, let me just pull up an example of one that I participated in today, all right? So here we are looking at NEO today, 5, 10, 15, pretty much gapped up and ran for the first hour. And then we get this nice little level of consolidation right here. Nice, I mean, that's about as good as you can get, especially for a larger cap stock. So we got, let's see here, 1, 2, 3, 4, 5, about 2 hours of consolidation. And then right here in the later day break, we got the break. And of course, it has to pop out and hit a new high. So, you know, once again, the turbo breaks that you see right here is not the turbo breaks of yesterday, because that's what I was using my turbo breaks alert window for, amping up the volume on the relative side. Initially, it was the 1-minute side, and trying to find these that look like NEO or similar to, right? But it's kind of like finding a needle in a haystack. There's so many things coming through this alert window when you're watching all stocks that you're going to miss a ton of them, okay? So it seems that the races kind of fit like a glove with this methodology. And by the way, NEO, let's see here, on the 5-minute, yeah, it did break out a lot quicker, okay? And this is, you know, this is where I noticed it from my races. So before I get too far off topic here, that's what we're going to talk about today. Using the stock races to streamline the methodology for finding orbs, and even better, with adequate volume, okay? So I'm just going to sketch out my methodology. Some of you may have heard bits and pieces of this from the live support session, or who knows, it's been so long, 5, 6 weeks, I might have just touched base in the very last office hours, but I feel like I've got it a lot more refined or nailed down. And once again, it is quite simple, which really, I mean, even better, okay? Even better, because let's face it, if you're watching the entire market, even if you're using some high volume filtering, you're still going to get hundreds, if not thousands of stocks coursing through there, depending on the day. And it just makes it, well, it's like trying to manage chaos. So by using the stock races to compile my list that I'll be watching for the day, let's see, how many did I have today? I dropped them into a spreadsheet. I just hope I didn't kill it. Okay. So before we get going here, this is it. 38 names. That's all I had to worry about today. 38 names. So how did I go about that process? Well, you can see right here. And by the way, I've got a nice list of links queued up. So before we're done here today, I'll drop a link. I'll drop several links into, actually I'll drop a layout link that's going to give you everything that you see right here. So you can pick and choose, you can use the layout, you can pick and choose, use bits and pieces of it. Also with a couple of extra custom formulas in here as well. But this is my main window, or my main monitor that I watch for this methodology that I'm about to lay out here, okay? So number one, I've got my races. Over here on the far left, the larger cap. I'm not sure if these are mega, by the way. Let's just take a peek because mega might be a little overly descriptive there. Okay, where's my top list? There we go. Let's just take a peek here. Okay, well, hey, I guess you could say, because I think that's about 100 billion. Okay, is it? Hold on, I can quickly. Nope, 10 billion, I think, is what we have here, because NEO was on there. We've only got a market cap of 33 billion. I was like, well, 100 billion would be mega. So market cap over 10 billion. Okay, that's what we're calling the mega caps. So let's get rid of that. So that's what's going on over here. By the way, that is the race that turned me on to NEO this morning. Right here, I've got 1 minute change with not really any substantial market cap. So if we just take a peek at this one, you'll just see it's a very simple configuration with volume requirements. As long as the stock has relative volume of 2 and it's between 1 and 300 and it's done 200,000 shares, boom, show it to me. I don't really care, all right? Don't care how much it costs, don't care if it's $1, don't care if it's 10 or whatever. If it's done 200,000 shares, show it to me. And pretty much the same with this race here. 1 minute change, positive change from open with pretty much the same filtering as 1 minute change. So these are the only 3 races that I watch currently. And the way that I go about the process is, obviously these are populated now. They're blank before the open. Everything's set to auto start right on the open. So boom, 1 minute into the open. And by the way, I have these on show all winners, right? I could flip it to show top 10 winners, but I like to see them come in and I like to see, you know, the list get bigger and bigger as the day progresses. But the bottom line is this. All I do when I see a stock win a 1 minute race, and by the way, all of these are 1 minute races, even the mega caps. So every 1 minute, I have several symbols to add to my list. And I'm maintaining the list with my like symbols, right? So simple, all I have to do is click on it. INM came through late, that's why it's not, you know, hearted up here. But all these symbols were collected pretty much in the first 30 minutes. All right, so creating a very small universe. Every time a stock wins a race, I just click on it, click the heart on my chart, it's automatically added to my liked list. Now, as I was talking about earlier, turbo brakes here is not the turbo brakes of yesterday. It is also pointed to my liked symbols list. So everything is centered around my liked symbols, okay? That way, I've got this guy on a audible alert, just the speech to text. So could be immediately, I'll start hearing all of these race winners that I've added to my list hitting highs for the day. Now, keep in mind, in the first 15 minutes, which kind of leads me to this topic over here, the first 5 to 15 minutes to trade or not to trade? That is the question. Well, the simple answer is this: if you can size up reasonable risk, sure, take that trade in the first 1 minute, 2 minutes, 3 minutes. But if you can't stomach the risk, don't do it. And you might be asking yourself, well, I don't even know what the risk is. So let's take a peek at one that I did play pretty early today, and it was a small stock, but the return wasn't so small. Okay, be big. Also, side note, 15-minute here, 5-minute here. In the first, probably for the first 45 minutes or an hour even, I'm watching a 5-minute chart just to give me more bars to work with, all right? So for example, let me just stretch this 5-minute chart out a little bit. Obviously the mauve area is the pre-market, and this is the first candle that we had today. Get that just a little bit bigger there. Second half of the chart's not so important. Okay, so you can clearly see the pre-market. Big had a pretty active pre-market, pretty reasonable, not too stretched out, nice guide. But 5, 10, 15 minutes in, where the orange arrow is, we're breaking that 15-minute opening range on big. So I pulled it up. I'm like, if I gave this thing down to the bottom of the pre-market, you know, how much would I be risking? It was about or the low of the day here. I think it was a dime at the time. I'm like, yeah, I like that. I also liked the fact that it was not too far away from the high of the pre-market range. So you can see here, 5, 10, 15, 20. It took about 20 minutes, a little swoop down and a grind sideways, but eventually we came and popped those highs from the pre-market. That's always a good thing when you got a stock doing some volume, pretty high volume all day. Only finished the day at 1.52, all right? But making an entry around $1.10 and got 10% out of that little guy before it folded over there. So this is a great example of making an early trade based off this methodology. Now, if you saw big breaking its opening 15-minute range here, it's a personal preference. Do I want to give it to the low of the regular session, or do I want to stretch it out to the pre-market? You know, that's kind of up to you. I just used the regular low today, and it worked just fine. It never really backed off all that much at all. So a great example of sizing up risk early in the market using the pre-market range. So once again, I would not have known about big hitting those highs without the races notifying me of it and then having that attached to this window here. Makes things a lot more simple. You know, imagine watching the entire market versus watching a universe of, what did I say there? 38 stocks total today, okay? All right, so once again, you know, every time a stock wins a race, you just like it, you're building your hot list. Your hot list is attached to your favorite alert window. In this case, my turbo breaks up, so that every time I hear a high being hit, I just pull it up. And the decision for me is very simple. Is the timing appropriate, right? And the timing is visual. Is it just breaking out, or has it already gone? Okay, I think, let's see here. Let's go back to NEO. Okay, so NEO had already busted, you know, no pre-market range to consider there. But man, when you see something like this, right? And this was approximately 45 minutes into the session. I'm going through all these stocks, okay? And if we were to cycle through these, they all look pretty hideous. A lot of these went down today, but not NEO. So, you know, NEO being one of the automotive stocks, definitely had its day in the sun of the past 4 days as well. But look how small the risk is here. You know, looking at the 15-minute, yeah, easily, you know, we can tell, but you have a lot more candles to look at here, a little bit more granular. So taking that trade on NEO right here, You didn't have to really coax me a whole lot to push the buy button on that one. And when we're talking about risk here, this is a 5-minute candle chart. So it's the same old methodology as any old opening range break that I've talked about in the past, right? This is the entry candle. Go back 15 minutes. So if we were wrong, the bottom of that wick would have been our out. Now look at the reward area. A lot bigger than what we risked. Now the bonus to the NEO trade today, other than the fact that it worked nicely and even gave us another setup if we wanted to add to it, about right here. Nice little add entry right there. The second bonus, or this is the second bonus on NEO, nice consolidation. Volume was nice and hefty all day. This 5-minute volume was always pretty substantial as well. So a second entry on a nice tame second tier range break today. But the third bonus on the NEO trade was a stock in the same sector. Okay, Lucid. Started seeing Lucid winning races, added it to my list because it was all NEO was all over the place, but it took a little while to settle out, right? So I kept seeing NEO hit highs off the open. Of course, I didn't hit it until later in the day when we saw that nice little consolidation. But I saw Lucid. I'm like, well, Lucid is doing its thing early. Nice little run up too. Presented itself earlier. So I'm like, well, if NEO's running, Lucid might, go ahead and run too. But once again, just a beautiful opportunity here. And this one came about 45 minutes. I think it was simultaneous. I'm just kind of losing my track here. Yeah, right at the same time. All right. So we had NEO breaking out right here. Lucid was on my hot list. I'm like, well, if NEO's going, Lucid's going to go too. And just look at the symmetry. I mean, the same type of action from, well, I can't say for the entire sector. All I was really looking at today was Lucid and NEO. And Lucid, kind of a no-brainer. Once NEO did its thing, I'm like, yeah, we'll take that one too. And then a second opportunity over here to add to the position. And that's one of the things that you're going to hear many traders talk about. Hey, cut your winners when you're supposed to, add to your winners. It's never, well, with patterns like this, it's not so hard to figure out when you might want to add to a position, okay? If you're a younger trader out there, well, that's a little bit more nebulous. So, well, when do I add to a winning trade? Well, when you see things behaving like this and, taking legs up, consolidating, and then breaking to higher highs again, these are great times to add to positions. All right, so two great examples there from Lucid as well as NEO, but not to be put in the corner. This one was a really good mover today as well, IDYA. Now we're getting further away from the open. Notice this little rounded bottom here that it put in on the 5-minute. And that break came about 5 minutes before the NEO, so my clock's a little bit off today, my mental clock. But this one came before the electric cars did, right? So took a little swoon down, comes back up, nice little rounded bottom, breaking out to new highs. And, once again, I want to harp or reiterate on how much more calm I am watching this window, right? You make your list based on the races, and then you watch the window. Or more importantly, you wait to hear the window. There's no way I could have had speech to text on my original turbo break. It would have just been blah 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 blah. You would have gone mad, right? But when you're only monitoring, when you've shrunk your universe down to race winners, and I can't say this is true all the time, but most of the time, they're going to have ample volume as well. Okay. So once again, finding these things at the most opportunistic time. You got a list of 38. I traded 10 of them today. That's not a bad ratio, and it's easily manageable as well. Same thing on the 15-minute right here. a little bit prettier on the 5-minute. But, you know, this thing came around at 10:53, topped out in the 12s, almost up 2 points. But what I really liked about this is when I looked over and, you know, all I could tell you is when I saw it above this level here, a little caption of Barry popped into my mind. He's like, look at that room, right? Look at that room from the candle back in, you know, August last month, 15, right? And so once we got above this level with some conviction, you know, this thing just kept on going. All right. And this brings up a great time to point out a couple of the columns that are in the window here. Now, you may be familiar with next higher low, but this is just giving you the next, how many points the thing might run before it runs out of steam. Okay. Well, I think it was week before, it was probably week before last, I pinged Michael Noss. I'm like, hey, can we have a percentage version of that? He whipped one back over to me. I've installed it. I really like it. I've got both of them up here just because I prefer both of them. But if I had to pick one right now and get rid of the other, it would definitely be the percentage value, you know, because as IDYA was hitting these highs 10 minutes before the close, if it kept going, it might run another 16%, right? So this has really helped me in the sense that, okay, I don't necessarily have to look over at the daily chart and squint my eyes and go, okay, that takes time, all right? That takes time away from, you know, how much the stock might move before you execute, might make you miss some other alerts. So just by referencing this column now, next high low dollar value and next high low percentage value, as soon as I saw IDYA this morning, and by the way, let's take a peek. I'm just going to duplicate this. We're going to point just to that guy. Well, as long as it lets me, there we go. Okay. And let's see, when was my IDYA entry? 11:05 Eastern, so 10:05 should come, yep. Well, yeah, okay. So cruise on back here a little bit. That's 10:05. Oh, I'm not even down to the, this thing ran so much today, I thought it was down to the bottom. Hold on one sec. Ah, that I had it on top there. That's why it was freaking me out. But look at these values, right? Look at these values that were present in IDYA early on as that thing was hitting highs. I thought I was seeing things, right? I'm like 29%. Of course, then I looked over and saw the big red bar that we had already, you know, gotten above this level. So, but theoretically, I don't even have to look at the daily chart when I see these large numbers here. So a lot of the times when I see something hitting highs and it's only got like 1% left in it or a few pennies, I just don't even bother. And a lot of the times those stocks, they may look good on the intraday, but they'll just stop cold in their tracks. So that's helped me avoid a lot of these ones that, you know, you may look at the daily and you might think that there's a little bit of room in there, but of course, getting the numbers, the actual numerical values, have been saving me a lot of time and helping me pick the ones that have the most potential, so to speak. All right, Randy, I see your question there. Neo came from the large cap. Since Lucid, I'm pretty sure, I can't remember off the top of my head. I want to say Lucid came from one of the 1 minute change or positive change from open, but I can't remember off the top of my head right now. And, you know, unfortunately, this isn't the entire history, I don't think. It's not like the alert window where we can just cruise all the way back down. Let's see here. Good question though, good question. I just can't recall off the top of my head. Yeah, no worries. Okay, so once again, what I've done here, when I drop those links for this layout, you're also gonna have the custom formulas for next high or low in percent and dollar volume. All right, so let me make sure I'm not leaving anything out here. All right, we talked about if you are going to trade in the first 5 to 15 minutes, reference the pre-market range for your risk. Folding in additional alert windows. Okay. So we've talked about turbo breaks. Okay. As soon as these things start hitting highs, if it's in the first 5 to 15 minutes, if you like what's going on in the pre-market and you can use that as a backstop, so be it. If you see it approaching the high and about to break the high, kind of like what we saw in the B-Big, and the risk is acceptable to the downside, take a pop at it. RGLS, that was what we had going on here today. All right. RGLS, I saw it right on the open. It had already, excuse me, my eyes are playing tricks on me today. RGLS, once again, saw it right here. Nice tight little pre-market range. So yes, this is the low, but this is where it spent most of its time, okay? So RGLS was one I was in early and had a nice little run, of course, pulled all the way back and then set higher highs. I didn't wait around, made some nice money in the RGLS. But what got my attention is using the bottom here of the pre-market range, not the bottom of the pre-market range, but the bottom of this consolidation in the pre-market range. I was like, yeah, I can stomach that. And it's already been up there once, and I've seen this enough times to where a lot of the times they like to revisit that pre-market high, and it did eventually. It just took until 11:20 after carving everybody up, okay? Fortunately, I took my money early on RGLS and then just kind of forgot about it. Of course, here in the computer go RGLS, RGLS, RGLS. The second half of the day up in this area was a little annoying, but my assumption was right initially. Okay, gonna take some here, gonna risk here. Risk to reward was okay, would have been a lot better pushed up to here, but hey, I mean, hindsight's 2020, and letting a nice profit erode, especially in these market conditions, I'll take the lumps on that one. Okay, so now let's talk about this window. Okay, it wasn't very productive today. You can see most of these are occurring after the close of the market, which is 3 o'clock my time. So these were the only hits that we had intraday, okay, in the market session. So what I've designed this one for is, depending on market conditions, a lot of the times pullback entries, if you miss the initial break, well, you probably might want to know if it's pulling back to, say, the 10 period. And by the way, a lot of the ones that we looked at today, when we're looking at the 15-minute intraday chart, I mean, look at this IDYA. Pullback to the 10 period was just pretty golden all day, all right? As soon as it started the pullback phase, floating well above it most of the day, but then it just surfed the 10 period. If we look at some of these other ones, you're going to see the same thing in these EV stocks. NEO doing the same thing. Pull back to it, a nice little bust up. Once again, hats off to Steve Gomez for turning me on to the 15-minute, or excuse me, the intraday 15-minute 10 period. It's a great guide when things are trending with volume. But this second window here is going to tell us when one of the stocks on the list is pulling back to the 10 period. You can see right here, change from 10 period SMA on the 15-minute, values of 0 and 0.1, little relative volume, and then the running down now alert is the one that I've attached to it. So don't necessarily want to use a new low, because who wants to know that, right? That's not what we're looking for. But the running down now alert, one of the faster alerts out there, focusing on the 1-minute time frame. So didn't find anything useful today, but hey, tomorrow's another day. This window could very well show me some nice pullback entries. in the days to come. So once again, it is tied to the My Light symbols list as well. All right, are there any questions about my ramblings about A, how I've been using the races to compile my watch list every morning?
I have a question.
Sure.
Are you using the show the top 10 winners organization on the right side for the winners?
Negative. I am saying show the show all winners.
All right, so click that. Just click that. And that's a different. That's Barry preaches that a lot, and I try to watch that too. It basically shows you the top 10. Now, obviously, you're going to miss a lot of the names that you did have on there. But if somebody just wants a watch list of 10 stocks, you know, after the first 60 minutes after the open, if I see something on there that, like, you know, was really strong and is on the top 10 list, I'll go through that list every 10, 15 minutes. But if I see something going sideways or pulling back and then touching my favorite 15-minute 10 SMA, I'll jump on those.
Yeah, you're right, Steve. And, you know, it's just a personal preference. I don't want to miss anything because you just never know which one's going to get up and boogie at what time. But hey, what about this? If you say show all winners, right? And then we just pull the old duplicate, and then we have one resting up here where we're watching top 10.
Sure.
Or you could even have, you know, if you feathered it like this and said, okay, duplicate windows, all winners and top 10.
I do a lot of that. I do a lot of overlaying windows so I can just see the top 10. But I just wanted people to be aware that you could condense that down to a top 10.
Absolutely. And you know what? I might do that. I might overlay just so I can see top 10 as well. When I first started using the races, I was just watching the top 10. And then I was like, oh, I'd see a symbol later in the day. I'm like, how in the world did I miss that? And I was like, well, I'm not going to use top 10 anymore. But why not do both? There's no there's no penalty, you know. It doesn't cost you anything else to do both. So I'm probably going to start doing both moving forward.
For me, I don't start looking at the races until, you know, 60 to 90 minutes after the open. I'm looking for those sweet spot setups. It's a time period thing of day, and so that top 10 list just focuses me much better than all the rest of them. So it's really to each their own, just the way trading always is. It's an art form, not a science.
Sure. And I see your question there, Randy. Was that what you were getting at, Steve, or did he re-ask that question?
He just wants to know how you get to that top 10 list. You
right click and either show the top 10. And then when we're on top 10 mode, if I right click, then you pivot back to show all winners, like so. All righty, folks, I see we're already bumping up against the top of the hour. So let me get these links over to you guys, or one link along with a couple of the custom formulas here. So in my opinion, the races have, well, not in my opinion, but let's just say from an old scalper, i.e. me, you know, someone that cut his teeth back in the olden days on scalping, and someone who really prefers the scalping methodology intraday. For the longest time, I wasn't really motivated because, well, it's just, I don't know, it was too hard to find the setups that I liked, right? But I can tell you this, with the advent of the races and the streamlining of this process, scalping's back on right now. It never went away. It's always, how do you find the good scalping candidates? And, you know, I've heard Steve kind of say the same thing. Some of the older cats around here, it's like, yeah. Whereas I was not scalping at all, I'm starting to scalp some of these stocks again. And so that's the modus operandi moving forward. Not saying I don't do some swing trading as well, but the races have definitely helped bring scalping back into my repertoire as of lately. And of course, just because it's a good day trade, I mean a good intraday trade, doesn't necessarily mean you'll look over at the daily and go, might have some legs, right? So that's all I got for today, ladies and gentlemen. Rami, let's see, how did you set up the pullback alert? Okay, real quick here. Once again, it is pointed to my light symbol, so I can watch, you know, the list for pullbacks, but all we did is check off the running down now alert and then dial in the position proximity to the 10 period. And that configuration should be in the layout link that I just sent you. And by the way, the layout link that I sent you guys does not blank out and clear your prior layout. So you'll just see these windows pop up on top. That way you can get rid of the ones that you don't want and keep the ones that you do and incorporate them into your layout. Okay, Scott, I think that is it. If you're ready to walk us on out of here, it is that time.
Hey, that sounds good. Yeah, let's address just a couple items on the way out. Let's see what slide we're on. So make sure to grab the My Favorite Strategy Indicators ebook. It's written by our own Dave Mabe, Director of Software Development. It's really easy to get. Just go to trade-ideas.com/strategy. Not only does it have good advice about using trade ideas, but it also has some cloud links you can import into your layout. We've also got a partnership with Interactive Brokerage. If you're using Trade Ideas, you can connect your Interactive Brokerage account directly with Trade Ideas, manage your positions and trades directly from Trade Ideas into your Interactive Brokerage account. So just go to trade-ideas.com/IBKR to find out how to become an Interactive Brokerage client. Also, similarly with E-Trade, there's $0 commission trading. Just go to trade-ideas.com/E-Trade. You can connect your E-Trade account if you already have one with the Brokerage Plus module and execute your trades, manage positions, all that good stuff directly from within Trade Ideas without having to navigate over to E-Trade. And we have a code, it's Fast Data, for 15% off an upgrade or your first month or year of Trade Ideas. Go ahead and grab that code, use it before the end of the month. Save you on a new account or upgrade. So you can find Steve and Jamie on Twitter. Jamie's at Quantbot. Steve is at TISTG. We're Trade Ideas on YouTube, Trade Ideas Pro on Facebook. You can also email us at info@tradeIdeas.com if you have any questions. That goes directly to our help desk. And of course, you can always call us at that number if you have a billing issue, but we do recommend the email contact. It actually gets the fastest replies. The recording will be up later tonight or tomorrow morning, and you get an email reminder tomorrow with a link to the playlist where you can find the entire recording. So thanks, Steve. Thank you, Jamie. Y'all have a good one.
Yep. Thank you, everybody. We'll see you next time.
Yep. See ya.